Hello, everybody. Welcome. This is my Wiley Solution walkthrough, Accounting Tools for Business Decision Making, 8th edition. This is problem 14-5. The question used, the textbook authors are Paul Kimmel, Jerry Weingant, and Jill Mitchell. The question used in the presentation is copyright 2022 by John Wiley & Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. So let's go ahead and have some fun. Okay, so we're now doing problem 14-5, and let's go through and take a look at this one in particular. So Empire Company is a manufacturer of smartphones. Its controller resigned in October of 2025. Not a big surprise there. A lot of people, there's a lot of good mobility in accounting. It's always fun. It's very hard to keep people. So an experienced assistant accountant has prepared the following income statement for the month of October. So you see here the sales revenue, and we can already kind of see here the problem with the operating expenses. And then over here, prior to October 2025, the company had been profitable each month. The company's president is concerned about the accuracy of the income statement. As her friend, you have been asked to review the income statement and make any necessary corrections. After examining other manufacturing data, you've acquired the additional information as follows. So it shows you inventory balances at the beginning and end of October. We're right over here. And then 75% of the utilities expense and 60% of the insurance expense apply to factory operations. So the first thing we want to go through and do is we want to kind of go through, and when we're looking at this over here, we really should be showing revenue minus, cost of goods, or basically sales minus cost of goods sold, getting us down to gross profit. And clearly, like, that's not happening here. And you're seeing there's a lot of just instantly, like, raw material purchases have no business being on the income statement. Direct labor cost, no. Advertising, okay. S&A, yes. Rent on the factory facilities, right? The word factory, that's in the wrong place. Depreciation on sales equipment, that's okay. Factory equipment, and no, that's got to be in overhead. Indirect labor, utilities, and insurance. So what we're going to go through and do is we're going to basically set this thing up again, as I've always been doing with this particular chapter, is we're going to be going ahead and using T accounts. So we're going to have our raw materials inventory. And I'm just going to go ahead and pause while I do this. Okay, so let's go ahead and start putting in the values that we know of. So raw materials had a beginning balance of 18,000, and it had an ending balance of 29,000. And I'm just pulling this data right from over here. For work in process, it had a beginning balance of 20,000, ending of 14,000. And then for finished goods inventory, it had a beginning balance of 30,000 and then an ending of 50,000. Now, one of the things I also want to kind of share with you too, and this is really like you're going to get what you pay for, but oftentimes when employees are looking to hire, as an accountant, you really want to be a CPA. And if that's something you want to explore in terms of doing accounting, I have a lot of resources for that on my channel. But again, this is kind of goes to show you're going to get what you pay for, right? So we put in those beginning balances here, and now let's go through and kind of try to figure out, by looking at the other accounts, where should other things go? So the raw material purchases of 264,000 are going to go into raw materials inventory. And what this basically means is that when I look at this over here, does 18,000 plus 264 equal 29? And the answer to that is no. The difference here, basically whatever left, is basically what goes down over here into work in process. And so this is going to be my direct materials. Okay. And again, if this is something that is, if this is something that is kind of new to you, if you didn't know this value, how could you figure it out? Well, you'd say 18 plus 264 minus X equals 29, right? And so then basically you isolate X and you're going to basically get, 253. Let's go ahead and take a look at direct labor cost. So direct labor cost, right? So factory payroll is made up of two components. It's going to be made up of direct labor, and it's also going to be made up of indirect labor, which here is 28,000. So the direct labor of 190,000, this is going to be going over here to work in process, right? So that's where it's going to be going here and going. The indirect labor of 28,000 is going to be going over to my factory overhead. Okay, and why is that important? It's because for factory payroll and factory overhead, this has to have a zero balance. So now let's take a look at our factory overhead. For our factory overhead, we've dealt with raw material purchases, we've dealt with direct labor costs, advertising expense doesn't go anywhere, selling and administrative, that also doesn't, just stays there. But we have over here rent on the factory. So factory rent, my factory rent is 60,000. Depreciation on factory equipment, not the sales equipment, but on the factory equipment, is 31,000. Now over here, it tells us that 75% of the utilities expense apply to factory operations. So my utilities expense, this over here is going to be 12,000 times 0.75. Because again, it's saying that 12 of the 12,000 bill, 75,000 relates to the factory. So that has to go to factory overhead. For the insurance, it was 60% applies to factory operations. So over here, this is going to be 8,000 times 60%, or 4,800. So essentially what we're now going to go through and do, and remember with factory overhead, this also has to have a zero balance at the end. So what I'm going to do over here is I'm going to basically go over here and credit this for 132,800. So my factory overhead right over here is going to be 132,800. So when I'm looking at my work in process now, it's becoming a little bit more clear. So in terms of my cost of goods manufactured, meaning what did I go through and send to finished goods? Well, what did I go through and send over here to finished goods? Well, it would have been 20 plus 253 plus 190 plus 132,800 minus Y equals 14, right? So I'm trying to figure this out. So this is going to be 20 plus 253 plus 190 plus 132,800. If I isolate X by, or isolate Y by moving Y to the other side, and I'm subtracting 14, I get 581,800. This is going to be my cost of goods manufactured, right? This is basically what the work in process that I finish, that I send to finished goods inventory. So over here, when I look at this, and let's just see if we're right so far. Oh, great. 581,800. So we did that one correctly. Then it's going to ask us to go through and prepare a corrected income statement for October 2025, and we'll do that momentarily. But right over here, what we now need to go through and do is we need to figure out with, oh, hold on for a second. I've got a kitten visitor. Just give me a moment. Hey, everybody, I'm not sure if you can see him. This is my skinny kitty. This is Ozzy. Ozzy, you want to say hello? Yeah. Not really looking too good. Okay, we always need to have a kitten break. If the kittens come in, the cats come to play, we've got to like take a break from Tchaikovsky's video today. Yeah, Ozzy, you want to say hi? Yes. Okay. I'll go ahead and pause. Sorry guys, if I get Zoom bombed by my cats, I have to kind of stop and kind of smell the roses, right? So over here, basically for finished goods inventory, right? So we've got 30 plus 581 does not equal 50. So this is going to be 50 plus 581 minus here is going to be 561,800. That amount that is leaving my finished goods inventory is going to be coming over here to my cost of goods sold. So my cost of goods sold is going to be over here at 561,800. So now this is asking us to prepare a corrected income statement. So let's go ahead and do that now. So we're going to have over here sales revenue. Our sales revenue was 780,000 less our cost of goods sold. Our cost of goods sold, we just went through and computed that to be 561.8. Let's go ahead and make this a little bit bigger. Okay, and this is going to give us our gross profit. Gross profit is going to be here as 218,200. And then we're going to say less selling, general, and administrative. Our SG&A is we have advertising expense. That is going to be 90,000. Selling and admin salaries. That is going to be 75,000. The rent on factory facilities, that is a part of factory overhead. Over here, depreciation, sales equipment. Our depreciation on sales equipment was 45,000. Our utilities expense. Then we have our insurance expense. Okay, so for the utilities expense, remember what we did here is we said 12,000 times 75%. So that must mean the amount that related to SG&A is going to be 12,000 times 25%. Likely over here, the insurance expense, which was 8,000, 60% related to the 60% related to factory overhead. So basically, we're going to have 8,000 times 0.4 or 3,200. Okay, so over here, so my total SG&A is going to be the 90,000 plus the 75 plus the 45 plus the 3 plus 32. Again, this is 12,000 times 25%. This is going to be 88,000 times 40%. And so our operating income is going to be our gross profit minus our total SG&A, or $2,000. And if we look down over here at the answer, net income is 2,000. We've actually done this correctly. So I like this question. This is kind of a fun one. It kind of causes you to work backwards from these types of problems. But, you know, it's, again, if you're using the T accounts, that's really, again, for all these problems, you really want to go through and use the T accounts. But again, if you have an instructor that is really dead set on you preparing a proper cost of goods manufactured statement, I just feel sorry for you. Maybe come over and take my class. I'm just kidding around. In any event, I look forward to seeing you on the very next video. I want to thank Wiley for allowing me to continue to use their material to make videos. And I look forward to seeing you on the next video. Have a great day.